What's going on, everyone? My name is Jeff. So in this video, I want to talk about a company I've newly been interested in. And actually, guys, I've been looking at this company from a distance for about a year and a half now. And I think my interest has hit a peak. I want to share with you Plug Power, ticker symbol PLUG. I'm sure many of you are probably already familiar with this company. And I'm basically just going to break down and do a full stock analysis video. So let me preface the video by saying this. This is neither a buy recommendation. This is neither a sell recommendation. This is me just giving the public a nice, well-rounded stock analysis. What all you're going to get with one share of Plug Power. We're going to talk about what this company does, what kind of products they offer. We're going to take a fundamental look. We're going to do a little chart work. We're even going to do a little bit of a historical approach to this company and try to take all of that and cram it into an 8 to 10 minute video. So I do plan on working pretty quick and trying to bust out some good content. So even though this is a $783 million market cap company, the popularity of Plug Power is growing. I think it's an industry changing product. Like I said, I just want to inform you what all you are investing in. That's why it's always very important to take a look at fundamentals, okay? Before we get started, guys, make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. Plug Power is a fuel cell company focused on customer productivity, providing the power to move businesses into the future with cost-effective hydrogen and fuel cell power solutions that increase productivity, lower operating costs, and reduce carbon footprints. Now, I want to talk about this photograph right here, guys. As you can see, some of their ProGen cells are inside of forklifts, inside of 18-wheelers, box-style trucks, taxi cabs. There is many different uses for these hydrogen and fuel cell power solutions, right? So they're trying to take place of normal batteries. This is a company that is very prevalent in grocery distribution all throughout the United States. Their renewable energies also help in e-commerce. They have a growing presence in manufacturing, logistics. This is a very fast growing company, even though it maybe doesn't necessarily show up on the stock chart. This is an extremely impressive list of customers that they have, and you would think after looking at this list, this stock would be one of the biggest stocks on the entire market. One of the divisions of their company is named Gensure. This is predictable backup power. It's highly reliable fuel cells for critical backup power applications. Let's scroll down here. Let's take a look at some of their customer base. Over here to the left, guys, their customers: AT&T, Cat Telecom, CSX, General Dynamics, Pacific Gas and Electric, Sprint, Verizon Wireless, Washington State Patrol. I can look through this list, guys, tell you I'm invested in about 4 or 5 of these companies just on this short list. And then briefly, let's talk about GenDrive, okay? That is their material handling business that is thriving and consistently growing with new and repeat hydrogen fuel cell customers. Let's take a look at some of those customers. Again, same deal once again. I was absolutely blown away by how many of their customers that I'm personally invested in. Starting down here with Coca-Cola, but there's even some good companies up here like BMW, Ace, Bridgestone. One of their customers being FedEx, the Home Depot, Honda, Kroger, Lowe's, Mercedes, P&G, Cisco, USPS, Walmart of Canada, Walmart, and then Whole Foods, which is now owned by Amazon. But as you can see, what's blown me away, for a company that has this small of a market cap but this large of a presence, I'm kind of confused why the stock is not performing a whole lot better. I figured this would be well out of the $1, $2, $3 range, be trading up into the 10s and 20s by now. Let's do a little bit more homework. Maybe we can figure that part of it out. Another quick snippet that I think is very important to share with you. A lot of people might have this confused, and on some levels it's true and not true. Amazon is not just a customer, they're partial owner of the company. Amazon inked a deal with Plug Power, marking a major investment in the struggling alternative power companies just after the news was announced. This deal allows for the fuel cell company to grant Amazon warrants to buy up to 55.3 million shares, like I said, or around 1/4 of the company's outstanding shares, and this would be an investment worth up to $600 million. Now, in addition to that agreement, Amazon committed to purchase up to $70 million of Plug Power fuel cell products for its enormous warehouses and distribution centers. So if that is not a good enough reason for you to invest, I think it's a strong enough pull at least to get this stock on your watch list. The fact that Amazon owns 25% of this company, and again, Amazon purchased $70 million of their products to use in their ongoing e-commerce business. So if you're having trouble with trading, or you're having a hard time finding any real footing in the stock market, come check out my personal course, Trade Alerts Pro. Like I said, this course is really designed around helping people and developing people to further their understanding of stock market trading while issuing out daily and weekly stock picks. So make sure to go check out Trade Alerts Pro. It is the first link in my description box. So I've got the 1-year chart pulled up on Plug Power. Now, if you look at this in context of 1 year, this has been an incredibly good investment. December of 2018, this is a $1.50 per share stock, dipped down with the rest of the markets getting as low as $1, getting under $1, and has done nothing but climb ever since that time. Here in April, got up to $2.77, and then right here, at the end of November, this stock traded itself all the way up to $4 a share and hitting a 52-week high of $4.04. And since that time has lost about $1 of value. And guys, now I want to back up to the 5-year chart, and then I want to look at the lifetime chart. Now, this to me is very disappointing that in 5 years' time, you would basically, if you would have invested into Plug Power 5 years ago, so we're talking December of 2014, you would be holding the bag right now, okay? Obviously, there's been a lot of opportunities to cost average down. It spent about 2.5 years basically just trading itself down, found this strong level of resistance around 94-95 cents. I think right here in April of 2017, that's when Amazon jumped in and made their big investment, and now has seen a very strong reversal since that time. But still, taking some of these really big dips, getting itself under $1. It seems like when it's under $1, that is a good time to buy, but not holding the level of consistency I want to see in a company. Okay, in 5 years' time, I want to see a lot stronger return overall. I don't want to try to catch these stocks on the bottom. They should be growing with every earnings report. We're going to get to that in just a minute. Let's go back here to 1999. This is when Plug Power IPO, guys. This chart is not on a reverse split basis, okay? It actually traded itself up over $1,000 a share during the tech boom of the year 2000. So think about that, guys. This is what one time an $1,100 stock that is now trading for $3. However, all along the way, there's been a lot of investors come and go, but the unfortunate part is no institutional investors have managed to stay. Why is that? I think the answer is really going to lie within fundamentals and earnings reports. It always comes back to those two things. So probably the biggest reason that dollar of share price fell off Plug Power, guys, is their $40 million secondary offering, okay? The stock did trade down 5.2% in pre-market that day. Its public offering of 40 million common shares at $2.75. Those net proceeds were expected to make up to $110 million. It grants the underwriters a 30-day option to purchase up to an additional $6 million shares. Most of the time, anytime a struggling company has a secondary offering, that is a huge cry for help. And I honestly wish this would not have happened, but we can't change the past. Let's go to their last earnings report. Their last earnings report, November 7th, they had an EPS miss of 1 cent, but they did beat on revenue by $0.8 million. Now let's go right down here. The revenue of $56.38 million, that was up 6% year over year, so they are showing some improvement. And I guess you can throw that in a bullish category. Now I'm going to point you to their last 4 earnings reports. Now, this is why I am still not yet a shareholder of Plug Power, okay? So 1, 2, and 3, they've missed 3 out of 4 earnings reports on consensus EPS. They had one beat. That was Q2 of 2019. Now, the guidance is moving upward, okay? Even with good, strong forward guidance. Considering the fact that they had the secondary offering, I think these shares are still going to trade very, very thinly for a while. And I don't see this linear path back to $4. I think if anything, on any kind of market weakness, Plug is probably going to drop back under $3. I would not surprise me to see it back in the $2.25 to $2.50 range. Here is another thing I want to make you very aware of: their profitability. They're negative 47% profit margin, negative 32% operating margin, and then the big one down here, negative 666% on return of equity, also negative on return of assets. Down here at the bottom, the operating cash flow, negative $67 million, and levered free cash flow is negative $115 million. So keep that in mind. If you are a Plug Power shareholder, you're not investing into the fundamentals. You're investing into the product and the vision that someday this company can be profitable. And I really think if you go off their guidance, they are moving in the right direction. But this is going to be a very difficult stock to time. And I do think it's going to trade down more considering that secondary offering. What I mean by that, on any strong weakness in the stock market, I think Plug Power will probably take another dive. But the future does seem very bright. What they really have to work on here, guys, is the balance sheet, okay? It's incredibly bad. They have 10 times more debt than cash. They have $43 million of cash and $453 million of total debt. That's absolutely, that just scares me away. That is that balance sheet right there is what has kept me from buying into Plug Power. I really need to see that turn around and move in a better direction. Even if that total debt number was just cut in half, or maybe the cash moved up to 100 million, I would start thinking about it, because I have invested in companies that are not as cash heavy if I'm believing in the product and the future. But very, very bad balance sheet in my opinion. So right there is where I'm going to pull the plug on this video. Do you see what I did there? I hope I've done a strong stock analysis for each and every one of you. I think in conclusion, we can all agree Plug Power does offer an amazing line of products that seem to have a very bright future with a superb customer base. It is just, unfortunately, this business does not yet make money, and so institutional investors are finding it hard to want to come and buy shares of Plug Power here. But at any rate, I will be keeping a very close eye on this stock, and I will be watching it, and I will also be keeping it into my earnings rotation. I want to be very plugged in, see what happens with this company, and I think it's very interesting where this can go from here. So thank you as always for watching the video, guys. Have a great day.